Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. So having reached a fresh 3.5-year high near 71.50, the RBA stressed inflation remains too high and signalled further hikes remain on the table following the recent move to 3.85%, with markets now priced in a strong chance of another increase in May. However, the Australian dollar saw gains capped by the softer Chinese inflation data. And on the flip side, January's labour data in the US after the non-farm payrolls posted 130,000 jobs added and the unemployment dropped to 4.3%, which has tempered near-term Fed cut expectations. However, the market now awaits for the next catalyst, and that is the US CPI, which could give further indication of a potential pause or no cut in the US. Overall, though, the technicals have buckled. There was previously bearish divergence, including the MACD with the RSI, and therefore could now see an indication for a move to 70.65. This is C minor, as we may see a slightly deeper move to 70.35 and reassess. Any advancement still feel around 71.25 at 65 profit takers may lurk. Market wasn't really too phased over the last 24 hours in price action as the euro now pauses just around the 118.65 mark. Given the fact with the CPI weighted in the US, let's see if the market plays a little bit to the downside and therefore look towards 118.35.45 and reassess. Technicals though are mixed with the RSI and MACD, so little to give away there. If we do get a bounce from 118.35, then that could push us back to 119 to 120 as a potential target. A little bit of momentum coming back into $yen after its 4-day slide and nearly reached its target around 151, figure 50. Overall, we are a little bit oversold, but I still feel the risk is to the downside, and that is any upside moves towards the mid 153 could be rejected and then find another trap and see the market slide. Reassess at 151. The pound attempting to gain but failed and now looking a little bit to the flat side. Overall, though, I feel the balls are lurking somewhere around 135.80. If we do get a bounce from here, that looks back towards 136.5 to 137 as a potential target. Another whipsaw price action when it comes to gold after dropping away from the highs of today, which is around 4,990, and now attempting to try and push lower given the fact that the technicals are still a little bit heavy. Do be aware that the pullbacks or the decline can still be deep with the trend line holding around 4,600. This is where I feel the demand or where the balls are hovering, and therefore let's see if we get a rally back to 5,000 to 5,100. Wrapping up with oil, bit of profit taking there. And the market fell sharply, but still holding above the 62 mark, and let's see if it can continue. Technicals have buckled though, but if we get a response like previously, then we could be looking back towards 64 to $66 a barrel. Well, that's about it. Thank you for joining me. And as always, we'll go for the intraday report. I hope you enjoy the great start to the new weekend.